Good evening, friends. I'm making this video, how one can predict, how I was able to predict the market correction in them. So I'll go through all the things. So how one can predict the market. See, market started moving higher. This was 19th high and 19th low. On the same day, there was a drastic correction to the low. Here you can see almost to the low of 22,087 around 2 p.m. And there in market tried to made an high of 21,162 twice. 162 to 77 and 73, making an equal high, and it corrected, and there was a huge pullback around 3 p.m. The market broke above this level. So the anticipated level was, by applying the Fib tool, I had predicted this is the level. Market can go up to 22,263. I had mentioned in the video. Let me take out this Fib tool. So what happened today is morning, their first candle itself is let me zoom out. First candle is a bearish candle. Next candle, you are seeing a green candle. It is not a trending candle. It is not a trending candle. Why? The trending candle should form like this. Should form like this. You can see this is a range candle. Taking the liquidity on both the sides. Buy side liquidity as well as this sell side. Next candle, of course, next candle was, next 15-minute candle was an higher high candle. So there, the momentum is not there in this candle. So it made an high of 22,248.5, and the next candle grabbing the liquidity 22,249. Later, market corrected till 10:30. Around 10:45, there was a reversal from here. So reversal was not very good. If you see reversal, see by itself, I made out that. So this was a correction. It's going to happen. I anticipated the correction to 22,095 and also 22,047, and it gave almost the full Fibonacci 4.3236 retracement. 22,001. It went up to 21,097. This was the anticipated. But what happened is, there was a reversal. Market tried to go up to the same level. You can see it has approached 22,241, little bit short of. I was able to make out something. When I draw the trend line, you can also do that. If I draw the trend line connecting the lows, I'm connecting the lows. See, this is the low, this is the low. I'm connecting the lows. I was able to see, even if I draw the highs, it is lower high, higher lows. And a wedge type of formation was seen in the market. I posted on the Quora, market preparing for correction. It was struggling at that time. So ascending wedge formation was seen in the market. I predicted that. Later, this was the reason I was able to market even after 12:30. It should have progressed higher. See, market 3 hours of trade, market is struggling to make the go past this level. That itself indicated and there is a struggle in the market. This is one analysis by applying the trend line. And also you can enable the moving average. Even the moving average crossover you can see. Let me remove the trend line. You can see the crossover here, confirming your trend line breakout. So beautiful, isn't it? Beautiful. So you can predict the market. It was, for me, I was able to predict the market in this way. See what has happened over here. It has taken all the 3 days price action. So price action, these are the lows. And the next day low is here. This is the 4th day low. What is this? 16 February, last week's low. Last week's low was 21,970. Now, what can happen in the market is this sell-off can continue up to this level. Up to this level, 21,950. And this is a consolidation before the breakout. This was the consolidation before the breakout. Probably market can come down to the level of 21,879 and this becomes the zone of support for Nifty, anticipated support. Now, it is a single day correction of 200 points from here. Market tried to make an high pullback to the level of 22,173, 197. It failed, actually failed and closing at the low of the day. So tomorrow, if there is any gap down immediately to the level of 21,930, look for the zone of support over here, 21,880 to 21,090. Then you can get a reversal from this area, a strong reversal you can anticipate in the market. How much you can anticipate? Suppose if it comes to this level, you can anticipate first level to be 0.5 retracement, that is 22,069, and it can even continue up to this level also, 22,175. You can see V-shaped recovery in the market. Or otherwise, if it is a trendy day, like another trendy day, it can go sideways like this, and then later it can go for sell-off. So high expiry may end up in a negative way to the level of 21,930. Tomorrow, opening bell, whether it is going to consolidate in the range in the initial hours and leading to the fall, or whether it is going to gap down to this level, immediate gap down can anticipate for the pullback. These are the two probabilities you can anticipate. But see, this is how one can predict the market for the reversal. So you need to wait for a proper setup. See, this was the proper setup. So yesterday setup was not complete. See, it was a triangle actually. Let me remove all the drawings, show it to you. Yesterday it made a high, and it made a low. And it made a higher low over here. And while closing, it was a breakout of the range. So actually, this is a trap by the market maker to grab the liquidity above this level. And now there was a liquidity here, making an equal low at this level. You can see if I place the cursor, you can see 22,083.05 and 22,083.05, exact equal low. So when the market makes the equal low, there is plenty of stop loss will be there. Liquidity grab. So when he has taken the liquidity, probably they may continue till this level. The correction may go up to this level, 21,949 to 21,925. This is the zone of support for the Nifty. So how the play will be, we have to watch and see whether it is a gap down and reversal or a consolidation and breakdown. So tomorrow, the opening bell, while closing, you can see a range candle over here indicating, see, this is a range candle. So indicating some sort of initial range formation on the Nifty tomorrow, like this. And then there may be sell-off in the market. Probably it may do this sort of movement in the market. So it can make a higher high like this formation. Then also you can apply the trend line, simple way of trading. Trend line and join the highs, because when it is going up, so now join the highs and then wait for the wedge formation or break. Probably after a huge sell-off, there will be some sort of consolidation before sell-off. This red candle, while closing itself suggests that market will undergo through consolidation in the morning hours of the market to lead for the correction in the market. So now at present, Nifty has shown it is going to sell off. So if I take the Fib tool, Fib retracement, trend-based Fib extension, if I anticipate, so 1:1 correction comes to ABCD correction comes to 21,907. So this is how I was able to, by step-by-step analysis, I was able to make out the momentum loss and anticipated correction in the market. Anticipated correction in the market, how it was possible, not only, see, without any indicator, simple trend line connecting the higher lows. See, I was able to connect the higher low. See, this was the higher low. Right? This was higher low and this was higher low. So, simple trend line connection indicated me. So, it is going to start. And also it made a lower high in this period. So, it made symmetrical triangle. symmetrical triangle making lower highs and higher lows, and the breakdown indicated. So this is how one needs to analyze the market to trade efficiently. Simply you should not go. So simple analysis, just analysis of the trend analysis, higher highs and higher lows will help you. So one more indicator is there on the trading view that may help you to note down this. You can apply. So I'll remove the drawings. Just see, it is automatically marking the higher highs, higher lows, higher low, and it made a lower high, and it was a trap. It then, after a higher high and higher low, it is making a lower high. So it is a caution. So when you see this, clearly you can apply a trend line from the higher low to this level. This is how one can anticipate the correction and one can be on the right side. Thank you very much, friends. Nalnakshi Swami signing.